Have you ever stared at your trading screen, completely paralyzed, watching a perfect setup unfold right before your eyes, but you couldn't pull the trigger because your indicators were telling you conflicting stories? One screaming buy, another flashing sell, and a third one sitting somewhere in between, leaving you frozen in indecision. By the time you finally make a decision, the move is already halfway done, and you're left wondering why you can never seem to catch these opportunities at the right moment. If this sounds painfully familiar, what I'm about to share with you today might completely transform the way you approach the markets forever. The truth is, most retail traders have turned their charts into something that looks more like a Christmas tree than a professional trading workspace. Layers upon layers of indicators, oscillators, moving averages, Bollinger Bands, RSI, MACD, stochastic, and who knows what else, all fighting for space on the same screen. And here's the brutal reality that nobody wants to admit. Every single one of those indicators is telling you about the past, not the future. They're all lagging, recalculating what price has already done, while you're trying to make decisions about what it's about to do. It's like trying to drive a car by only looking in the rearview mirror and wondering why you keep crashing. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Now, here's something that might surprise you. The most successful traders, the ones consistently pulling money out of the markets year after year, aren't using complex indicator combinations or proprietary algorithms that cost thousands of dollars. They're doing something far simpler, something that's been working since the days of ticker tape and will continue working long after all of us are gone. They're reading pure price action, and they're waiting for one specific pattern that reveals exactly when the market has chosen its direction. This isn't about prediction or guessing. It's about observation and recognition. Think about this for a moment. Price is the only thing that's actually real in trading. It's the result of every single transaction, every buyer and seller coming together and agreeing on value at that exact moment. Everything else, every indicator you could possibly add to your chart, is just a mathematical derivative of that price. It's a calculation, an interpretation, a delayed echo of what already happened. So why would you make trading decisions based on the echo when you can listen directly to the source? Has this ever occurred to you before? That maybe, just maybe, you've been overcomplicating something that could be remarkably simple? Stay with me until the end of this video, because what you're about to discover is the one price action pattern that professional traders watch for. The setup that appears right before major moves, and how you can start recognizing it on your own charts immediately. This pattern doesn't require expensive software, complicated calculations, or years of experience to understand, but it does require something that most traders struggle with. It requires patience and the willingness to strip away everything you thought you needed. Let me paint a picture for you. Imagine you're standing at a crossroads with 3 different GPS systems in your hands. One tells you to go left, another says right, and the third is still calculating. What do? You stand there confused, second-guessing every option, while others who simply looked at the road signs and understood the direction have already moved forward. This is exactly what happens when you're drowning in conflicting indicators. You're not making informed decisions. You're stuck in a mental prison of your own creation, waiting for some magical alignment that rarely comes at the perfect time. The hidden truth that nobody talks about in trading education is that this paralysis isn't protecting you from bad trades. It's actually robbing you of the best ones. Think about every major move you've witnessed in the markets. By the time all your indicators lined up perfectly, where was the price? Already extended, already showing. Exhaustion, already preparing for a pullback. You entered at the worst possible moment because you were seeking comfort instead of clarity. This is the transformation that separates struggling traders from consistent ones. It's not about having more information. It's about having the right information and the confidence to act on it decisively. Now, I want to go even deeper into this mindset shift because understanding the psychology behind it changes everything. There is one price action pattern that cuts through all this noise like a knife through butter. It's the break of a key level after a clear line of least resistance has formed. I know that might sound technical, but stay with me because this is beautifully simple. The market, at its core, is just a battle between buyers and sellers. When price consolidates, when it goes sideways for a period of time, what's really happening behind the scenes is that these two forces are in equilibrium. Neither side has control. But here's where the magic happens. Eventually, one side wins. The market tips its hand. Price breaks out of that range with conviction, and suddenly the path forward becomes crystal clear. This moment, this exact setup, is what professional operators wait for. They're not predicting which way it will break. They're simply watching, observing, preparing. And when the break happens, they act without hesitation because the market has shown them its intention. Meanwhile, the average trader misses this entirely. Why? Because they're still waiting for their indicators to confirm what price already told them 5 candles ago. They're looking for certainty in a game where certainty doesn't exist. The operator understands something profound. You don't need certainty, you need probability and clear risk management. When the market breaks a key level with volume and momentum, probability is heavily on your side. That's your edge, that's your signal. Not some lagging oscillator that's still processing yesterday's information. This revelation changes your entire approach to reading charts. You start seeing opportunities that others completely miss because they're distracted by their decorations. Write in the comments, clarity over comfort, if this resonates with you and you're ready to simplify your approach. The beauty of this approach becomes even more apparent when you understand what to look for before the breakout actually happens. It's like watching a storm gather strength. Before it unleashes, the market gives you signals, whispers really, that most people completely ignore because they're too busy watching their indicators spin. Here's what the transformation looks like in practice. You start noticing when a price range begins to tighten. The swings get smaller, the candles become less dramatic, and it feels like the market is holding its breath. Volume starts drying up because fewer people are interested. Volatility fades into what looks like boredom. This is the moment when amateur traders close their charts and walk away, thinking nothing is happening. But this is precisely when you should be paying the closest attention. What's happening behind the scenes during these quiet periods is fascinating. The market is consolidating energy. Think of it like a coiled spring being compressed tighter and tighter. The longer this compression lasts, the more explosive the eventual move becomes. And here's where your journey as a trader takes a completely different direction from the crowd. While they're searching for excitement and constant movement, you're watching this quiet accumulation phase with anticipation, knowing that when it breaks, it's going to break hard. Then suddenly, like a switch being flipped, everything changes. The tape quickens, volume expands dramatically, price punches through that key level with authority, and the breakout is underway. This pattern has repeated itself millions of times since markets began. It's not a secret, it's not hidden. It's right there in plain sight for anyone willing to observe rather than predict. This brings us to a fundamental shift in mindset that separates those who consistently profit from those who constantly struggle. The crowd operates on hope and prediction. They look at a chart and say things like, "I think this stock is going to rally," or "I feel like we're going to see a pullback here." Notice the language. Think, feel. These are guesses dressed up as analysis. The professional operator thinks completely differently. They never say they think price will do something. Instead, they wait for price to prove what it's doing, and then they act. This distinction might seem subtle, but the impact on your trading results is massive. One approach is gambling with extra steps. The other is responding to evidence with calculated risk. If this approach to trading resonates with you, hit that subscribe button, because this channel is built for traders who want to understand market behavior at a deeper level, not just collect more indicators. When you adopt this operator mindset, something profound happens to your decision-making process. You stop trying to be right about future direction and start focusing on reacting correctly to present information. The market shows you accumulation near a key level with tight price action and building volume. You prepare. Price breaks that level convincingly, you act. Price fails to hold above that level, you exit. Immediately, without ego or attachment. This is operating, not hoping. This is reading the message the market is sending you in real time, not trying to predict what message it might send tomorrow. The revelation here is that you already have everything you need to succeed. You don't need another indicator, another course, another system. You need clarity of observation and the discipline to act on what you see. Drop "I'm learning to observe" in the comments if this perspective is shifting something for you. Now let me show you something that might be uncomfortable to hear, but is absolutely essential to understand. Every indicator on your chart, no matter how sophisticated or expensive, is built from historical data. It's taking prices from the past, running them through a mathematical formula, and then displaying the result. This means, by definition, by its very nature, an indicator is always behind what's actually happening. When your RSI finally crosses above 70 to signal overbought conditions, or when your MACD lines cross to flash that green signal everyone gets excited about, where do you think the professional money is? They're already in the trade. They entered bars ago when price first showed strength at a key level. They're not waiting for mathematical confirmation of something that already happened. They're reading the story as it's being written, not after the chapter is finished. This is why so many retail traders feel like they're constantly chasing. Because they literally are. They're entering trades based on information that's already been priced in at levels that no longer offer favorable risk to reward, with the best part of the move already behind them. It's like showing up to a party 2 hours after it started and wondering why you missed the best conversations. The hidden truth here is that indicators aren't designed to give you an edge. They're designed to make you feel comfortable with decisions you should be making based on raw price behavior. They're psychological crutches, not crystal balls. When you make the decision to strip all that away and focus purely on price, something remarkable starts happening in your perception. You begin to notice that every market, every stock, every currency pair has its own personality. Some move with explosive volatility, making sharp turns and violent reactions. Others grind slowly, methodically, almost predictably in their rhythm. These aren't random characteristics. They're behavioral patterns driven by the participants in that market, the institutional money, the retail crowd, the algorithmic traders, all interacting in unique ways. Understanding this transforms trading from a mechanical process of watching signals flash to an art form built on observation and patience. Think about it like getting to know a person. When you first meet someone, you don't understand their tendencies, their reactions, their patterns. But spend time with them. Observe how they behave in different situations, and suddenly you can anticipate their responses. Markets work the same way. The more time you spend watching pure price action in a specific instrument, the more you start recognizing its rhythm. You see how it behaves near certain levels, how it reacts to news, how quickly it reverses, or how stubbornly it trends. This knowledge becomes intuitive, almost instinctive. You're no longer trading based on what an indicator tells you. You're responding to the personality. You've learned to read. This is the journey from mechanical trader to market operator, from following rules blindly to understanding context deeply. What this means practically is that you can start anticipating how a move might unfold, not through prediction, but through recognition of familiar behavior. You've seen this market pause at this type of level before. You've watched how volume typically expands right before it makes its decision. These revelations compound over time until you develop what looks like a sixth sense, but is really just pattern recognition refined through disciplined observation. Comment: I see the personality if you're starting to notice these characteristics in your own charts. This brings me to perhaps the most difficult lesson for new traders to internalize, and it's one that has nothing to do with technical analysis or chart patterns. It's about the relationship between activity and profitability. The amateur trader wakes up every morning with an itch to trade. They need action. They need to feel like they're doing something, making moves, being active in the market. If they're not placing trades, they feel like they're missing opportunities, like money is being left on the table. This mindset is absolutely poisonous to long-term success, yet it's everywhere in trading culture. The constant checking of charts, the obsession with finding setups even when none exist, the need to have an opinion on every market move. This isn't trading, it's addiction dressed up as diligence. The professional operator thinks completely differently. They might watch the markets for days without placing a single trade, not because they're lazy or scared, but because they're waiting for that one setup where everything aligns perfectly. They value precision over frequency. They understand that their edge isn't in being constantly active, it's in being selectively decisive. This fundamental shift in perspective changes everything about your journey as a trader. You stop measuring your day by how many trades you took and start measuring it by how well you waited for the right opportunity. The impact of this transformation on your account is dramatic. Fewer trades, better entries, less commission and slippage, lower stress, and ultimately higher profitability. If this perspective on reading pure price action made sense to you, go ahead and hit that like button. It helps this message reach other traders who are ready to simplify their approach and trade with more clarity. Now, when we talk about that perfect setup the professional is waiting for, we're really talking about one specific moment in market behavior. It's the breakout from accumulation or the breakdown from distribution. This is the pulse of the entire market operation, the heartbeat that tells you everything you need to know. When price has been consolidating, when it's been chopping back and forth in a range while the crowd gets frustrated and bored, something is happening behind the scenes. Smart money is either accumulating positions quietly, building a large position without moving price dramatically, or they're distributing, slowly selling into strength without collapsing the market. This process can take days, weeks, sometimes even months, depending on the time frame you're watching. But eventually, the accumulation or distribution phase completes. The market has absorbed all the supply or demand at that level, and suddenly there's an imbalance. When that happens, price doesn't just drift, it breaks. It moves with conviction and purpose. This is the market's definitive way of saying, I've chosen my direction. This isn't a guess or a possibility, it's a declaration. And here's what separates those who profit consistently from those who constantly struggle. The professionals are watching for this exact moment. They've identified the key levels, they've noticed the tightening range, they've seen volume patterns shift, and when the break happens, they're ready. They act immediately because the message is clear. Meanwhile, the crowd is still waiting for confirmation from their indicators, still debating whether it's real, still looking for additional proof. By the time they finally decide to enter, the easy money has already been made. Learning to recognize this pattern in real time is like developing a sixth sense for market intention. You're no longer reacting to what happened, you're responding to what's happening right now as the market reveals its hand. Write, "I'm waiting for quality" in the comments if you're ready to embrace patience over activity. There's something almost poetic about how the biggest opportunities in trading announce themselves. They don't arrive with fanfare or flashing lights. They don't send you a notification saying, "Get ready, something massive is about to happen." Instead, they begin in the quietest moments, when the market looks completely dead and uninteresting. This is the paradox that most traders never grasp. They're scanning for volatility, for movement, for excitement, completely missing the fact that the most explosive moves are born during periods of absolute silence. Price goes flat, the range narrows, volume dries up to barely a trickle. Traders get bored and close their charts, moving on to find something more stimulating. This is exactly when you should be leaning forward, paying closer attention than ever before. What's happening during these quiet periods is a transfer of ownership from weak hands to strong hands. The impatient participants who need constant action are exiting their positions out of frustration or boredom. Meanwhile, the patient capital, the professional money, is quietly absorbing everything being sold without pushing price significantly. They're building their position in the shadows, carefully, methodically. Then, once their accumulation is complete, once there's no more supply to absorb at these levels, something shifts. Without warning, sometimes without any obvious catalyst, the line gives way. Price explodes out of that range, with force and conviction. Volume surges, momentum builds, and the market is suddenly moving, leaving behind everyone who wandered off looking for entertainment elsewhere. This moment right here, this is what you've been patiently waiting for. But notice the difference in mindset. You're not chasing this move. You're not scrambling to get in after it's already extended. You recognize the setup, developing during the quiet phase. You marked your levels, you prepared your entry, your stop, your position size, and when the breakout confirmed, you simply executed what you had already planned. This is operating from a position of strength, not desperation. This is the transformation that separates consistent profitability from constant struggle. What makes this approach so powerful is how it naturally integrates every essential element of successful trading into one coherent framework. Think about what's required to execute a clean breakout trade properly. First, you need discipline. The discipline to sit on your hands while the range develops, to not force trades when your setup isn't present, to follow your rules even when it feels uncomfortable. Second, you need patience, the willingness to watch price action unfold over days or weeks without interfering, without trying to predict which way it will break. Third, you need risk control, knowing exactly where you're wrong, sizing your position so that even if this trade fails, your account lives to trade another day. And finally, you need conviction, the confidence to act decisively when your moment arrives without second-guessing or hesitation. Here's the brutal reality that nobody wants to admit. Most traders fail not because they lack knowledge, but because they master one or two of these elements while completely neglecting the others. They have discipline, but no patience, so they overtrade the wrong setups. They have patience, but no conviction, so they watch perfect opportunities unfold without acting. They have conviction, but no risk control, so one bad trade wipes out months of progress. The market demands all four working together in harmony. Drop "mastering all four" in the comments if you're committed to developing each of these elements equally. The emotional roller coaster that so many traders experience, the anxiety before entering a trade, the panic when it moves against you, the regret when you exit too early. All of this comes from one fundamental problem. They don't trust their setup. They're taking trades based on something they heard, something they read, or worse, something an indicator told them without truly understanding why that signal matters. So when the trade starts moving, when price does what it naturally does, which is fluctuate, they have no anchor point, no foundation of confidence to stand on. They're hoping their analysis was correct, rather than knowing it was sound. This hope creates fear, and fear creates terrible decision-making. True confidence in trading doesn't come from external validation. It doesn't come from having 10 indicators all pointing the same direction or from getting a second opinion in a chat room. Real confidence is built through preparation, through spending countless hours observing how price behaves in different conditions, through tracking your setups and seeing them play out again and again until pattern recognition becomes second nature. When you've done this work, when you've studied price behavior extensively, something shifts inside you. You stop guessing, you stop hoping, you start recognizing situations with certainty born purely from observation and experience. You've seen this exact setup develop dozens of times before. You know what usually happens next, not because you're predicting, but because you're recognizing familiar behavior. This is the transformation that changes everything about your trading psychology. You enter trades with calm conviction instead of nervous hope. When price pulls back against you, you don't panic because you understand that pullbacks are part of the pattern. When it moves in your favor, you don't get euphoric because you know the work isn't done until your target is hit. This emotional stability isn't something you're born with. It's something you build through deliberate practice and honest observation. Now let me share something that might reshape how you think about technical analysis entirely. Every pattern you see on a chart, every breakout, every reversal, every consolidation isn't really about lines and shapes. It's about human behavior made visible through price. Behind every candle is a decision made by real people with real money experiencing real emotions. Fear and greed, these two forces have driven market behavior since the first exchange opened, and they'll continue driving it long after we're gone. No amount of technological advancement or algorithmic trading changes this fundamental reality. Markets move because humans are afraid of missing out, or afraid of losing what they have. That's it. That's the entire game. When you understand this, when you truly internalize that, you're not reading lines on a chart, but rather reading collective human psychology, everything clicks into place. A breakout isn't just price moving above a level. It's the manifestation of fear of missing out, overwhelming the fear of being wrong. A breakdown isn't just technical failure, it's panic overcoming hope. The patient trader who learns to read these emotional shifts in real time through pure price behavior builds their account steadily, consistently, while others blow up their accounts chasing every move that looks exciting. The revelation here is profound. You're not looking for secret patterns that nobody else knows about. You're developing the ability to recognize timeless human behavior expressing itself through price. Action. Comment, I read emotions now, if this perspective is opening new doors for you. When you really stop and think about what's happening in real time on your charts, there's a profound truth that becomes impossible to ignore. Price is the only thing that's actually real. Everything else is derivative, secondary, constructed. Price represents actual transactions where real money changed hands at that exact moment. It's the purest expression of what the market believes right now, not what it believed 5 minutes ago or what it might believe tomorrow. This is where the separation between traders and gamblers becomes crystal clear. Traders respond to what price is telling them in the present moment. Gamblers are waiting for some external signal to tell them what they should have already seen. Every indicator on your chart, no matter how popular or widely respected, is simply taking that pure price data and running it through a formula to produce a delayed interpretation. It's like watching a movie with subtitles that appear 3 seconds after the dialogue is spoken. You're getting the information, sure, but you're getting it late. And in trading, late means expensive. By the time your indicator finally reacts and flashes its signal, the professionals who were reading raw price have already positioned themselves. They saw the accumulation happening in real time. They noticed when buying pressure started overwhelming selling pressure at key levels. They didn't need a mathematical confirmation of something that was visibly unfolding right in front of them. This is the hidden truth that transforms struggling traders into consistent ones. The market speaks one language, and that language is price. Everything else is just translation, and translation introduces lag. When you learn to read price directly, you're getting information at the source, unfiltered and immediate. You see strength or weakness as it's developing, not after it's already developed. This gives you a timing advantage that's impossible to achieve when you're waiting for indicators to catch up to reality. Now here's something that might surprise you about where the real money gets made. The trades that transform accounts, the moves that generate life-changing returns. They almost never start during the exciting, volatile, high-volume periods that attract all the attention. Those explosive moves everyone talks about, they begin during the most boring, dead, lifeless market conditions imaginable. While the crowd is distracted or has given up watching because nothing seems to be happening, that's precisely when professionals are positioning themselves. This isn't coincidence, it's strategy. Smart money operates in the shadows. They accumulate their positions when volume is low and interest has faded because this allows them to build large positions without moving price against themselves. If they tried to buy aggressively during high-volume, volatile periods, they'd push price up dramatically with every purchase, giving themselves terrible average entries. Instead, they wait for these quiet accumulation phases when the market is basically asleep. They can buy consistently over days or weeks without creating obvious footprints. The tape whispers what's coming during these periods, but only to those who know how to listen. Most traders have their charts closed because they've decided nothing interesting is happening. This reveals something profound about the nature of opportunity in markets. The best setups don't feel comfortable. They feel boring right up until the moment they explode. This requires a complete mindset shift from hunting for action to hunting for preparation. The journey from amateur to professional isn't about finding better indicators or learning more complex strategies. It's about developing the discipline to watch paint dry while others walk away, knowing that behind this apparent inaction, the stage is being set for significant movement. Right, I watch the quiet. If you're starting to see opportunity where others see boredom. If you've made it this far, I know you're not just casually browsing. You're serious about making this shift in your trading, about cutting through the noise and focusing on what actually matters. That tells me everything I need to know about your commitment to growth. This channel exists specifically for traders like you, people who aren't looking for quick fixes or magic indicators, but real understanding that builds lasting edge. If that resonates with you, hit that subscribe button, because every video we create here is designed to deepen your understanding of market behavior and price action in ways that actually move your trading forward. And look, I'd love to know you stayed with me through this entire conversation. Drop pure price action in the comments if you watched all the way through. It helps me understand what's connecting with you, and honestly, it's just good to know. There are serious traders out there doing the work alongside me. If this perspective on reading markets differently from the crowd made sense to you, a like on the video means more than you might think. It tells me this message is reaching the right people. Before you go, there's another video right here that dives even deeper into how professional traders identify these accumulation phases before breakouts happen. It's the perfect next step in this journey we're on together. Click and continue. with me over there, because what you've learned today is just the beginning of seeing markets through completely different eyes.